Hello! In today's video I want to talk about risk because I know for sure that it's on your mind and it's the first thing that people think about when they think they want to start investing is how risky is it going to be? So today we're talking about what is risky, what is your personal risk tolerance because everyone's is different, and third is what do I recommend or what I did for myself to explore my own risk tolerance and what I was okay with. So number one, what is risk? Now, everyone's understanding of risk is very, very different, but every day when you walk out of your home, you are taking risks. Existing is taking risks. Going outside is risky. Driving your car is risky. Starting a business is risky. Everything in life is risky. The problem is, how bad do you want it? What are you willing to sacrifice? What are you willing to risk? Because there is no avoiding risk in life. Nothing is safe, and if somebody says that something is safe, then he's fooling you. He's lying to you, or he's lying to himself. There is nothing out there that is safe, and that's a good thing. Now, when it comes to finance, though, I think for myself, one of the riskiest things that you can do is to keep your money in the bank and let it sit and do nothing. Because there's inflation. Hell, it's a lot bigger than we expected. Banks can go under, economies collapse, all kinds of things happen that could endanger your money if it just sits with a custodian. Quite frankly, you're better off spending it and enjoying it and living your life to the fullest rather than just leaving it there, not multiplying it by some kind of an investment and not enjoying it either. I just can't get it through my head how that is considered safe or reasonable thing to do. You're not enjoying your money, you're not growing your money either. So do either or. Existence is dangerous. Existence is risky. There are all sorts of risks lying around the corner that we see or we do not see. That is a fact of life, and we should be okay with that. Basically, if you are not taking risks, you might as well be dead. Because the safest thing out there is probably death. Because once you're dead, nothing can happen. That's it. It's done. Point number two. What is risk tolerance? Well, everyone's risk tolerance is completely different. And what is safe to me is dangerous to you. And what is dangerous to me is safe to you. For example, I'm an avid scuba diver. And for a lot of people, that sounds like an unnecessary and crazy risk, but for me, I consider that to be very safe and very fun, obviously. There's the other way you could look at it. I consider skydiving to be insanely stupid, well, not stupid, risky. It's just that I wouldn't do it because I'm scared of heights, while some of you could potentially really love that. So risk tolerance is very different from person to person, and it's a question that only you yourself can answer. So what you need to do is just explore it, approach things, do things, try things, risk things. And that's the only way you can discover your own risk tolerance. For some people, crypto is safe. That is, that's different people, different tolerances. There are some people who use leverage, which is borrowing to buy more stocks that you can afford, and they consider that to be safe and okay. Well, that is something that I would never do, and that is too risky for me. I would rather just use my own money. Point number three, my recommendation, or more accurately, what I did for myself to kind of get started and explore my risk tolerance. The first thing I did is basically I started with a very boomer portfolio, if you will, which was a very conservative split of 60-40 stocks to bonds. Now, that is something that is widely accepted as probably the most basic and safe stock portfolio, and usually it returns between 7 and 8%. Now, I stuck with that for about a year and a half, and it got me through the pandemic as well, which was a very crucial moment, because had I gone 100% into stocks, I probably would have, it would have been a lot more stressful for me. But instead, I also held bonds, which really helped to dampen the negative effect on my portfolio. What I mean by bonds here is US Treasury bonds, widely considered to be probably the most safe investment along with gold. Now, that was a very conservative portfolio, but that was my plan. I wanted to start conservatively and then slowly explore what I feel safe with. And over time, I extended my portfolio to tech stocks, a lot more than tech stocks, ETFs, which are very heavy on tech. And this year, I also added crypto, which is widely considered to be probably the riskiest asset class. Over time, I've completely removed the bonds from my portfolio because I believe currently it's not a very beneficial economic climate to be holding bonds due to the inflation. Instead, right now, everything that is on financial markets that I hold, about 90% of that is in stocks and ETFs, and about 7 to 8% of that is crypto, which currently I'm planning on expanding to maybe 10 or 15% of my portfolio over the next few years, whenever there's a good buying opportunity, that is. And therefore you can see how my journey evolved, and that's what I would recommend that you do as well. First, I started very conservatively, then slowly but steadily, once I felt comfortable with the different asset classes and how they move, how they relate to each other, I started shifting my portfolio to a more risk-hungry approach. So I started with the stocks and bonds split, then slowly and steadily getting rid of the bonds and moving into tech stocks, which are more volatile but provide more rewards to their risk. After that, I started slowly getting into crypto. So you can see how my risk appetite has really increased during the last year. Nonetheless, I am never risking too much. What I mean by that is that I never have more than I can afford to lose in a single position. For example, because crypto is very risky, right now, if I lose the whole stack of my crypto, which is 7 to 8% of my portfolio, yes, that is not nice, that is not comfortable, that is not good. It would not bring me in a position where I would be losing too much. Losing 7 to 10% of my portfolio completely gone is something that I'm okay with. And it's a risk that I've accepted. When it comes to crypto, for example, and many other high-risk assets, you should never, absolutely never, invest something there that you cannot afford to lose. I see some people taking out loans, taking on debt just to invest in high-risk assets, and I think that is absolutely insane. I would never do that, and I would advise you to also never do that. That is not safe. In order for you to be making consistent gains, you need to be in control of your emotions. Because if you're taking too much risk, then as soon as your investment drops, you start panicking. And that is not a good place to be when shit hits the fan. You need to be in control of your emotions and you need to stick to your plan. That is the only way you can make good gains and control risk. Because controlling risk is probably the most important thing that you can do to succeed in the markets. And of course, diversification is the key to spreading out risk. Don't ever have all your eggs in one basket unless you have an insanely good idea of what you're doing and you're experienced and you have been doing this for a long time. But if you're a new investor or if you're just broadly investing like myself, it's good to be diversified. For example, I have a few stock picks that have done not so well, and I've made a decision to, in the future, move more towards ETFs rather than picking individual stocks. Of course, I've had stocks which have done amazingly well, but that's the risk of picking individual stocks or picking individual crypto rather than investing in the whole market, because it's much more difficult for you to lose if you invest in the whole market. As soon as you begin investing, you need to align something with yourself. If you're taking, for example, $10,000 to start investing, you need to be thinking about, okay, what am I okay with losing? What I mean by that is that if you buy something right now with that money, would you be okay if tomorrow it drops by 20, 30, 40, 50, or however much percent? And those are, of course, theoretical losses because you haven't sold yet. But that is something that happens very often in the markets. And you need to be okay with holding through that rough period so that you can realize the gains after everything has blown over. And that is what happened to me during the pandemic period, because that was a very, very tough period for the markets. There were periods where every day you could see a lot of losses, unrealized losses, obviously, because most of my portfolio I did not sell. But seeing minuses every day, that can take a toll on your psyche. So you need to understand that these things happen in the markets, and if you put your money in there now, your investment could go down in value. And that is something you need to accept for yourself. For example, for me, I've accepted that I could wake up one day and see that my portfolio is minus 50%, because that is the risk that I accept in order to make good gains every year. You need to be okay with seeing that loss and not panicking and not selling, not doing something stupid that you will regret after that. You need to just grit your teeth and push through it, because that is something that happens quite a lot in markets. They move up and down all the time, and if you let that movement push you around, then you're probably not going to do well. The best thing to do is just buy and hold over the next 10 plus years. Then for sure you will not make a loss. But over the next 1, 2, 3, even 4, 5 years, nobody could guarantee you that you wouldn't be realizing, well, not realizing, but seeing losses in the value of your investment. Obviously, if you don't sell, that's fine. But if you do, well, you've realized the loss. So the best thing is don't sell, hold it, push through that, reap the rewards after 10, 15 years. Well, that is it for this video, and you have quite a bit to think about. But for the next video, we're going to get specific, and we're going to talk about, okay, which products are okay for you to start with, and how easy it is, and how do you open a brokerage account. Thank you so much. See you next video.